Hi, Harrison. This is Ryan with TrendLizard.com. I got your email. You had asked me to take a look at a couple stocks for you tonight, so we're going to do that. Take a look at them using the Elliott wave theory, which is obviously what we do at TrendLizard.com. This is a service we provide for all of our professional level subscribers at TrendLizard.com. If you haven't visited us before, come check us out, see how the Elliott wave theory works in real time. So the two stocks I'm going to take a look at for you tonight are MARA, Marathon Digital Holdings, as well as MRNA, Moderna. So we've looked at both of them before. We're going to do an update, but as always, we'll just start from the beginning and see what we can find. So with MARA, Marathon, it was incepted back in 2012 and basically trended lower into 2020. It's hard to label that move, as I discussed last time. There's overlap all over the place. If there's anything that makes any kind of sense, is the possibility that this is an ending diagonal that ended in 2020. But no matter how you want to label it, obviously the important thing is what's happened off the 2020 low. And it looks like a beautiful, trendy five-wave move. Apparent, without even labeling it, looks like a 1, 2, 3, 4, 5-wave move. So let's go ahead and zoom in and look a little bit at this move here. And this is that five-wave move. We can subdivide it every which way. So we're fairly confident in this labeling here that we had a first wave, a second wave, a third wave, a fourth wave, and then a fifth wave up off the 2021 low. So the question we have to ask is this advance, this fifth wave advance over, or will it continue? If it's over, it would mean that this entire up leg off the 2020 low is over and that a much larger counter trend pullback has begun. Now, as far as size of such a pullback is concerned, it's already done a lot of the work. You can see this pullback here. It doesn't look very large, but because this is a logarithmic scale, it's already actually retraced about 38.2% of this entire up move here. So I don't know if there's a substantial amount of damage. I mean, it could go as low as like 32 or so, but I think you would see a lot more chopping around and sideways movement if this up leg is over on Marathon. So that's the question. There's more than one way to label it. We want to look at all of them just to kind of develop some probabilities. So we're going to zoom in and look at this fifth wave advance to see whether it's likely that it's over or not. So let's go ahead and do that. So first possibility is that it is over. Basically, this would be based on an ending diagonal for wave 5. You'd have a first, second, third, fourth, and fifth wave advance. You have overlap between this first wave high and the fourth wave low, which isn't possible unless it's in an ending diagonal or a leading diagonal. So if the move ended, it's via an ending diagonal as shown here. If MARA, Marathon, moves below 45 at any point, this would increase in likelihood. 45 represents a 61.8% retracement of this up leg. If that happens, it kind of wrecks any of the bullish possibilities that we will look at, but that is the label or the level to keep in mind here is 45. So let's look at a different way to label this fifth wave advance off of May's low. Another possibility would be that we got a wave 1, a wave 2, and everything we've seen since is the formation of a larger third wave. Now, the only way that this works is if Marathon stays above 45, that same level, because if it moves below 45, it overlaps with this first wave, and you can't have overlap in the third wave of a trendy move. So this would not make sense if Marathon moved below 45. Let's look at one more possibility. This possibility changes. You see, the initial expectation is that the fourth wave completed in May as an ABC move here. On this possibility here, it has a more complex move with the fourth wave actually ending in July. It basically boils down to the same thing. Then you would be in that fifth wave, an incomplete fifth wave advance with a first wave, a second wave, a third wave, and a fourth wave. And the key level, once again, would be 45. You wouldn't want to see price move below there because, again, it would cause overlap, and that just shouldn't happen. It's also a 61.8% retracement of this up leg, which also is a level that should not be breached if, in fact, a larger fifth wave is going to play out. So that is the key for us, 45. Marathon needs to stay above 45 if it's bullish. Now let's go ahead and zoom in and look at November's pullback to see if it provides any clues as to what we might expect. When we do, we see a move that could potentially be trendy to the downside. Can't say with any great confidence that it is. It's still too new of a move, but this has obviously been a very painful move for Marathon. It's lost a lot of value over the course of just a couple weeks, but it does have a trendy potential look to it, as you can see the 5-wave move here. Now, the bounce that's emerged over the last couple days has a trendy look itself, So it's hard to come to any great conclusions yet on this near-term price action. The things to take away is that Marathon needs to stay above 45 if it wants to maintain any bullish possibility. If it doesn't, then we have to start looking at the possibility that this entire 5-wave advance is completed and a much larger multi-month counter-trend pullback has begun that would point down to this yellow area, which again is already being tested and runs as low as 32. If instead it's able to continue higher and move above 70, this pullback that's played off of November's high would prove to be a counter-trend move despite the 5-wave potential it currently shows. So if it continues down, is able to continue this recovery that it's kicked off over the last couple days and move above 70, or continues giving us trendy upside action, bottom line, if at any point it's able to make this a counter-trend down move off of November's high, then we can look at the other two options. I can't tell you right now which is the case. I mean, this one makes more sense to me just because an ABC pullback seems to have completed there, so this one makes most sense to me. But as long as it stays above 45 and if it gives us some trendy upside action and is able to get above 70, then the door will stay open for more strength ahead as a larger 5-wave advance takes shape. Either way, when wave 5 completes, whether it already did or will in the future, at that point you do have to expect that larger correction that should last several months as that 5-wave move is corrected. Get back there as this 5-wave move is corrected to the downside before the next 5-wave advance begins. So overall, got to be bullish on Marathon, but a matter of timing. Keep an eye on those key levels. So let's go ahead and move on to Moderna now. Here it is. This is the labeling that we've been working with over the recent efforts that I've taken to try to label this thing. It was incepted back in 2018, had a little back and forth, and then kicked off to the upside, a very clean first wave, a second wave pullback, and has gone from there. The labeling that we have gone with has considered all of this part of a larger third wave advance. First, second wave, third, and a fourth wave with a fifth wave up to come. Now, Moderna has taken a very large hit recently, and so there has been some doubt that has been injected into this possibility. As you can see, Moderna in this pullback has moved below the yellow support area, which means it has retraced more than 61.8% of this third wave up leg right here. Now, we wouldn't expect a fourth wave to retrace more than that amount, so this is a warning sign. Now, one of the things that's going for Moderna is the fact that it's quickly recovered and moved back back into that yellow area. So I don't think this labeling is dead yet, but I think we have to at least acknowledge the possibility that this has a different labeling, that there's a different way to label this than what we have been going with so far. Let's go ahead and look at those other possibilities here. Another consideration would be that we have a first, a second, a third, a fourth, and a fifth wave that completed at the 2021 high, and now a much larger correction of this entire up leg is taking place. Now, I know for a fact what I'm going to hear in the comments is, hey, wave 3 can't be the shortest. You are absolutely correct, and the good news is wave 3 is not the shortest. It appears to be shorter than both the other legs, but if you look at it, it's gone from about 60 up to about 180. That's about 120 points. If you look at wave 1 here, even if this was 0, which it's not, it went up to less than 100. So it was less than 100. This was over 120 points. Wave 3 is not the shortest. This is a possibility. It doesn't really hold the right look. It doesn't look right, which is one of the official requirements in the kind of RN Elliott handbook. But it is a possibility that has to be considered. Let's look at one other possibility. The other consideration is that we had a first wave, a second wave. The advance off of looks like that low right there into here, this high here was a third wave, and everything we've seen since is a fourth wave pullback that should be nearing an end. This seems like a decent consideration as well. I think between the three, this one and our initial labeling, we're still fairly keen on. I think this one makes less sense at this time just because it fails that right look requirement there. So we're going to go ahead and zoom in on the pullback itself and see if we can figure out what is going on here. So if we look at the pullback itself, it does continue to look like a counter trend move. Now, last time we looked at it, the key level we said is a move below 392 would be a warning sign, and that should be an indication that we need to be careful. Certainly proved to be the case. It's absolutely broken down and tanked since then. And again, like I said, it moved below that yellow support area to the downside, which again is a warning, but the fact that it's been able to recover back into that area provides some hope that maybe this is still just that fourth wave correction and Moderna will recover from here. So what we need to be watching is the recovery effort off of November's low, because if this is just a fourth wave correction, it really can't move any lower than this. You can get a throw over, but as long as it recovers and gets back going in the right direction, we're okay with it. But if it continues to dip, game's over. This wouldn't be a good labeling. So here's a look at the recovery so far off of November's low. Obviously, it's so far a three-wave move. It needs to stay above 240 to maintain the possibility that a low was recorded in early November. If it can stay above 240, Moderna will have the potential to continue much higher again over those two possibilities, either part of a larger third wave up or as a fourth wave correction with wave 5 coming to the upside. So that is the key level that we're watching, 240. We want to see this upside action in November turn into trendy 5-wave movement. That would give it kind of a path higher so that it can give us some trendy upside movement and return to the upside. If these things fail to happen, if this recovery off November's low turns into a counter trend move and it moves below 240, then we would have to put more weight into the possibility that this entire 5-wave advance is completed and is now undergoing correction. Now, again, just like with Marathon, it's already moved into the yellow support area, even if this entire 5-wave advance is completed. That shows you how substantial this pullback is. But the bigger thought is that it would take longer to correct this entire up move that began in 2019 than just a handful of months. So if wave 5 did complete, and if price moves below 240 to strongly suggest as much, we would have to think that a much larger correction is going to play out over time before Moderna is able to resume its uptrend. So that's what's at stake. You can be bullish here as long as it stays above 240. If it moves below there, I think it's time to go for the reasons laid out. So Harrison, I hope that's helpful. Have a wonderful holiday weekend, and we will get back to work very soon. Take care.